Well, finally, some good news on the horizon, folks. I'm happy to share it, so let's dive right in. Mortgage News Daily has a 30-year fixed rate conforming loan, 6.58 today. We were at 6.60 1 week ago. We were at 6.68 a month ago. So we are down 1/10 of a point in the last 30 days. We were down quite a bit more than this 2 days ago, y'all. The multi-month lows on the news that we had a deal with Iran that was likely to be signed. Now, we've all seen that news reported a lot over the last couple of months, but this time it actually stuck. And we have a signed agreement, or at least a memo of understanding that maps out what the parties are responsible for over the next 90 days. Now, if everyone complies, that leads to a final peace accord with Iran that really will give the markets a lot of impetus, y'all, and a lot of relief, frankly, particularly as it pertains to energy prices, which have driven so much of our economic issues over the last several months as this war has gone on. So good news that that deal is signed. We already see national averages for gasoline falling below $4 a gallon, y'all. Just as a reminder, in the last administration, we had gas averages over $5 a gallon. So, getting it back under $4, even in light of all the energy interruptions that we have had in the supply chain, that's a big deal, especially that it's coming this soon. So more to follow. We should see mid threes pretty quickly, I would think, y'all, and that's going to be good news for future inflation reads. And that gives us leads us to the next part of this, which is, what does that mean for the Fed? Well, this was the first Fed meeting yesterday with our new Fed chief, Kevin Warsh. And y'all, he impressed a lot of economists with the way he ran this meeting. He impressed a lot of economists with the way he does not play any games with the messaging. If you notice, if you nerd out on the Fed comments and the Fed statement that comes out after these meetings, the way that I do, first thing you noticed, it's half as long as they used to be. However, bond market sold off pretty sharply yesterday, y'all, and we looked like we were headed in the wrong direction with some of the things that Mr. Warsh did say. He reiterated the 2% target for the Fed on inflation, and he also stated flatly that the Fed will hit that target. So having such an emphatic statement on the inflationary side, the markets didn't care for that much, and you saw quite a sell-off yesterday as a result. Now, long term, y'all, he is a fiscal conservative when it comes to the Fed's balance sheet. So it's going to be interesting to see how this plays out over time. He is a free market economist. So knowing that that is his predisposition, long term, that adds more stability to the fiscal responsibility of the country and how we handle our debt. That is ultimately going to be best for us long term. But if we're looking for a short-term political hit from Kevin Warsh taking over this role, we're not going to get it from him, y'all. And frankly, I find that very refreshing. What we will get, though, is monetary policy that is more closely tied to absolute economic realities, and that's what we've all been missing and needing. We've seen a lot of politics played with the Fed over the years, including our former chair. So I'm thankful, frankly, for somebody that looks to be more insulated from that. The future will tell whether that continues to be the case. Here's what the Fed futures are saying, y'all. Not much change. When we talked about this last week, these numbers are almost identical to what they were then. We now have a 15% chance of a cut by the end of this year. So, y'all, if you're banking on a cut by the end of the year, not likely to see it. There's a 48% chance of a hike by the end of this year, either a quarter or even a half a point. Now, by the end of this year, there's an 85% chance of them staying either the same or going up by the end of this year. So that's about where we were this time last week as far as Fed futures are concerned. So what does that mean for the rest of us? We're going to see interest rates trend a little bit lower as we see moderating inflation and as we see prices come down on energy, y'all, and that's happening pretty quickly. So we may see some impetus of that go into the summer buying season. So praying for that stability to come back into the marketplace. Frankly, I could use a break from some of the anxiety that all of this uncertainty has created. And I know that I'm not alone in that. In any event, thankful for the peace accord. If for nothing else, y'all, lives have been lost over us being at conflict. And anything that brings peace and stability is something I'm in favor of. So let's celebrate that first and foremost. But let's also embrace and welcome and be thankful for some stability in the marketplace. Looking forward to it. Hopefully, I'll have more good news to share next week. Hope everyone stays blessed, stay safe, and we will talk to you next week.